morning or good afternoon, everyone. It's 8:15 GMT, and we are here to discuss the economic data release on the UK Manufacturing PMI, which is due in about 15 minutes. So today, me and Alexander are going to do the release. As usually, I will start with the fundamental part, and then Alexander is going to continue with the market reaction and positive or negative surprise strategy. Yes, before we start, yes, all the best to you on the Labor Day. But yes, okay, getting back to the release, this reading is released monthly on the first business day after the month ends and shows managers' evaluation of the relative level of business conditions within the manufacturing industry. So, first of all, let us have a quick look at what has happened in the preceding months, and then we will have a look at the forecast for this month. Let me just put one chart on the whiteboard, and then we might continue. Okay, so here you can see how the reading has actually developed throughout the last 2 years. And if we look at the past couple of months, then we do see that since the month of November 2013, the UK Manufacturing PMI has gradually declined from 58 to 55.3 points the last month. But if we look at this month, when looking at the Bloomberg poll forecast, we do see that the UK PMI manufacturing will likely to set a good start to the second quarter, as it is expected to have increased slightly in April from 55.3 points to 55.4 points. And let us also have a look at the Bloomberg survey summary as well as the top 10 forecasts. So let me just put them on the whiteboard. Okay. So I still need to put one more table and then we might continue. Yes, so here we can see that the median estimate is at 55.4 points. And if we look at the top 10 economists, prediction makers according to Bloomberg survey, then we see that the forecasts are ranging from 55 points to 56 points, meaning that actually the reading could be anywhere in that within that range. Yes, the last thing that I would like to do is to have a look at the Dukascopy fundamental analysis contest, where we ask our traders what impact do they see a particular economic event having on a particular currency pair, and in this case it's going to be the Great Britain pound USD currency couple. So yes, here we see that 57% have voted bullish, meaning that they see that this event will have a rather positive impact on the cable, while still 24 people who participated in the contest still think that this might push down the pair. But okay, that was all from my side from now, and I invite Alexander to the whiteboard to continue with the technical analysis.
Thank you, Maya. Hello, everyone. So, yeah, we still have more than 10 minutes to go to the news release, so plenty of time actually, and I guess I can say something about the UK economy itself. Actually, if I recall correctly, the British economy has lost some of the momentum in the first quarter of this year. However, according to official projections, the economy will continue expanding and building up the steam in the coming months. Therefore, yes, there is a rather high possibility that today's report will surprise markets to the upside. And just to remind you that today's figures, that will be only the first part of economic releases from the UK, including manufacturing, construction, as well as services PMI data. So they actually usually have a great impact on the markets. Well, even though manufacturing sector accounts only around 10% of the UK economy, still we see that statistically the data has rather strong impact on the market. And as we see that during the last 5 months, the average volatility was more than 25 pips, so pretty impressive volatility actually. And just to remind you once again that the volatility is taken 5 minutes before the news release and 5 minutes immediately after the data is published. And we see that in case the actual reading came stronger than the consensus forecast, the market reaction was stronger than expected. So there were actually two cases when the reading surprised markets to the upside, and the volatility was ranged from 33 to 43 pips. So once again, very impressive moves. Regarding the pair's performance currently, so we see that amid the calm session today, the pair has been rather calm, and actually it has been fluctuating just in just in 20 pips range. So once again, the volatility was rather muted, and the potential take profit actually, as you can see, it's placed around 169 mark, and even though that's a strong psychological level, also that's yesterday's high. And if I recall correctly, the pair was pushed higher to this level by strong inflation data from the eurozone, and as well as French consumer spending, Spanish GDP, and German unemployment figures. So therefore, the pair is likely to limit its appreciation when touching 169 mark, and in pips that will be just 16 pips. That's twice less than the average market volatility, and the main reason behind it is the fact that consensus forecast stands only for a 0.1 point improvement, so not a really big change. Regarding the potential stop loss, so currently it's placed around weekly resistance around 168.78, and once again in pips that will be just 6 pips from the current market price, so not a really very risky trading strategy. Regarding the market sentiment and currency indices, so actually there's nothing practically changed from Monday when we were speaking about UK data as well. As always, the market sentiment is strongly bearish still, with more than 70% of open positions being short on the pair. Regarding the currency index, the UK currency is sold in vast majority of all cases, and actually that's rather strange fact that traders increased the number of sell positions on the cable and other sterling crosses. And if I recall correctly, yesterday that was only 71%. Now we see that it's 74%. So traders are getting more concerned about the UK economy when being based on the fundamental analysis. In contrast, USD is bought in more than 73% of all cases across the board. And actually that's rather surprising, keeping in mind that yesterday a report from the Bureau of Economic Analysis showed that US economy almost stalled in the first quarter with just 0.1% expansion. So that's rather interesting actually why Dukascopy traders increased their interest in the United States dollar. Regarding the pending orders, here we see that a slight majority of pending orders in the 50 and 100 pips range are placed to sell the cable, meaning that in a medium and long-term perspectives, traders are not so sure that the pair will continue depreciating. And regarding the market sentiment provided by other market participants, here we see almost unchanged picture, as traders at Luanda, Saxo Bank, and Daily 6 are selling the sterling versus the greenback in more than 70% of the time. And just a second, guys, I will have a look at the pending orders in all pending orders, not just in the 50 and 100 pips range. So just a second. Well, here we see a completely different situation, as almost 55% of pending orders are placed to buy the cable, meaning that in a long-term perspective, Dukascopy traders still believe that the pair will appreciate. Regarding the technical indicators, in contrast, they are suggesting that the pair will appreciate, and as you can see, vast majority of technical indicators on the variety of time frames are sending buy signals, including indicators on the 30-minute, hourly, 4-hour, and even monthly charts, which are supporting the case for pairs appreciation. However, I would like to point out that MACD indicator on the hourly, 4-hour, daily, and weekly charts are sending sell signals, meaning that the pair can be overbought already, and we'll see some correction in the nearest future. So therefore, we should be careful with the bullish outlook for the pair. That will be it for the technicals. And one more table to show you that, as always, sentiment with the all other sterling crosses. Just a second, just 65.18. So as we see that market sentiment is not clearly marked as such couples as Euro, Great British Pound, Sterling Aussie, as well as Sterling Swiss Franc, Japanese Yen, and New Zealand Dollar. Therefore, there are only two interesting currency pairs from the perspective of market sentiment, including Great British Pound and Loonie, as well as the cable, which we are discussing right now. So I see that trader is concerned about the Euro USD outlook, and I guess we still have 3 minutes before the news release, and it will be worth turning to the Euro USD chart. So first of all, I would like to point out that the pair will be highly volatile from the perspective of fundamental data, keeping in mind that later today we're having a speech of Janet Yellen, as well as U.S. unemployment rates and manufacturing data. And I guess there's a rather high possibility that data will surprise markets to the downside, keeping in mind, once again, yesterday's disappointing GDP figures. However, on Friday, the pair is likely to be even more volatile, as U.S. Labor Department will unveil non-farm payrolls as well as unemployment rates. So, from the perspective of fundamental analysis, the pair is likely to be highly volatile. So I see that traders holding short positions on the pair. Just a second, I'll have a look at technical indicators. So I see right now that technicals on the weekly and monthly charts are sending buy signals, meaning that they also support the case of pairs appreciation. So I guess the near-term outlook there will be still bullish for the pair, and amid a lack of fundamentals from Europe, the pair is likely to be driven by data from the United States. Therefore, I guess you should pay attention to these reports. However, once again, the outlook for the pair is bullish from the perspective of fundamental analysis. And the key levels for short traders, that's obviously weekly resistance at 138.67. So I hope that answers your questions. And I guess we can switch to the cable now. Actually, even 1 minute left before the news release, and the pair has already rallied more than 11 pips. So once again, there's a rather high possibility that we'll see stronger than expected figures in less than a minute already. So, okay guys, so the data should be already probably out. And actually, I guess you can follow the link, which is placed in the chat section, and it will link you to the technical analysis on Euro USD. Well, so the initial market reaction is strongly bullish, and the pair has performed 38 pips rally, so that's completely in line with average volatility on the pair. I see that the UK Manufacturing PMI came at 57.3, so that's significantly above the consensus forecast. Therefore, that was not a surprise that the sterling has received strong bullish bias. And we see that the pair has penetrated the 169 mark, where we have placed our take profit. And currently the pair is stuck around weekly resistance at 169.18. So just a couple more words. So yeah, as already mentioned, the pair is currently trading in 169.09, and the next key level for the traders, that will be daily resistance and weekly resistance at 169.18. But keeping in mind upbeat data from the UK, this level is likely to be reached in the nearest future, and the pair is likely to hold above 169 mark. So I guess that will be pretty much from my side. So I hope that was useful for some of you. Yeah, in case of any questions, feel free to publish them in the chat section. And for now, I'm giving the floor back to you, Mike.
Yes, thank you so much, Alexander, for the release and the technical part of it, particularly. Yes, so we do hope that we gave you some useful information. We do see that the reading came out at 57.3, which was very above all the estimates that we had at the Bloomberg polls, as the highest one was at 56. Yes, before we finish up, I want you to kindly invite you to join our Dukascopy research webinar at 12 GMT, because today we are going to be joined by Mark Spilty, who is Dukascopy Vice President and Chief Operational Officer, and he is always presenting something interesting when he joins us, so be sure to not miss that. But apart from that, have a great day and see you later.